Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into our YouTube channel for our weekly video analysis. If you like this video, please give us a thumbs up and consider subscribing. So today we're going to look at the market cap breakdown and show you why I still think large caps are the place to be. And then we've got a trading lesson with two breakouts. The first one, a successful breakout with Finance XLF, and the second one is a failed breakout with the Steel ETF XSLX. So a big part of the analysis, trading, and investing process is narrowing your focus. And the first step to narrowing your focus is choosing what you're going to ignore. And that's really easy, actually, because when you think about it, you want to ignore stocks or ETFs that are definitely in downtrends. You want to ignore stocks or ETFs that are seriously underperforming. You know, a couple of weeks of underperformance is not a big deal because that could be a correction. And you also want to ignore stocks or ETFs that have these long sideways consolidations. Because why? Because there are better looking charts out there. There are charts with uptrends. And one of those charts with uptrends would be SPY. So at the biggest level, the capitalization level, if you will, you got large caps, you've got the equal weight S&P 500, you've got mid caps, and you've got small caps. And where do you want to put your focus in that group? Well, it's clearly going to be large caps, because if we look at the S&P 500 SPDR, it's clearly in an uptrend here. We can even make some sort of a rising channel working here. It's, we got to the upper end of that channel and fell back. But clearly, this is going from the lower left to the upper right. We're in an uptrend. We look at our Stoke close indicator. It's at like 97. And it's been above 80 for months. When you're above 80, you're pushing 6-month highs and you're in a strong uptrend. So you can see it's green. Now, if we go down a little bit, say, and we look at equal weights, which would be the S&P 500 equal weight SPDR RSP, it's not performing bad either. So if you're in the S&P 500, you're still doing okay. So we look at RSP, and it had this big consolidation, and it broke out of this consolidation. So this was a consolidation within an uptrend. We broke out, and it lasted almost 3 months, so it got a little bit long, but then we got this gap. We filled that with a big move up and a breakout to new highs. And then we can see what's called a classic throwback. So here you have this kind of breakout zone, this kind of resistance zone, and it turns into support. So what you do is you break out and you throw back to the breakout zone. And that resistance zone turns into support, and then you get a bounce. And this is an important concept because later on I'm going to show some ETFs that held on their throwbacks and continued higher, and some ETFs that failed to hold their breakouts on their throwbacks and basically was a losing trade, if you will. But RSP, for all intents and purposes, broke out, had a throwback, and is now pushing to a new high again. So the equal weight S&P 500, which represents the average stock in the S&P 500, is hitting a new high, and that is net positive for the overall market. Now, for a lot of ETFs, I've identified this August low, and that's my line in the sand. And you can see we dipped below it intraday, but bounced. Now, if we close below these August lows, then that would be a failed breakout, and that would be a concern. So we've gone from SPY, clearly the leader, RSP doing fine here with a breakout and new high. So we're going to go down one more step. We're going to go to mid caps, MDY. And we can see that mid caps are doing pretty good. They're not as good as large caps because you can see MDY peaked back here in April. So it's got these kind of lower highs working here. I could redraw that little channel line. It's kind of an adjusting channel, but it started to slope down a little bit more here and slope down a little bit more here. So you can see we got this breakout and we had a pretty hard throwback, and we broke below that August early August low. So that was kind of like a breakout and a failed breakout to me when we had that hard throwback. But now we've got this incredibly strong 4-day bounce, and we're getting above that mid-August high. So mid-caps are showing some resilience here. And if you look at Stoke close, it's still been bullish. If it's green, it's on a buy signal, a bullish signal, and it's at 78. So it's not quite as strong as SPY and RSP. You would still be preferring stocks that are in the S&P 500 and ETFs that are more weighted towards large caps. All right, so now we're going to move down another level. We're going to go to small caps. Now, this is IWM, and it's had a market-leading advance here the last 4 days. But if we look at it, going back to, say, March, we can see it's just been in a big trading range. It keeps bouncing near the 210 level, and it keeps failing in the 235-ish area, the mid-230s. And it's just a bunch of noise in here. So we have what I thought was a bearish wedge, and we broke that wedge. You can see we broke that. This is the wedge here. So I was watching this bearish wedge. When I get a trading range, I'm looking at the swings within the trading range. But we hit this wedge and we broke it. And because Stoke close triggered bearish in the second half of July, I had a bearish bias towards IWM. And so that was a bearish signal. But this just goes to show you how foolhardy it is to short stocks. I'm sorry, but it is a losing proposition for the long term. Sure, one day you're going to get a bear market, but right now we're not in a bear market. Just because IWM signaled a long-term downtrend in my book using Stoke close doesn't mean we're in a bear market. The S&P 500 and RSP, those two are the most important ETFs to watch, and they are still in bull markets. And so I would never short anything when we're in a bull market. But we broke down here, tested support, and got this big bounce. But IWM is still not on my radar. Why? Because it triggered bearish, and because it's seriously underperforming, and because this chart is going nowhere. So I'm pretty much avoiding small caps, focused on large caps. So I wrote about the finance sector this weekend in Chart Watchers because it had a breakout, it had a throwback, it was at its moment of truth, and it held the breakout, and you can see it's bouncing the last 4 days here. Now, before I go on, I'll just tell you about these indicators here. This is Stoke close. It's the 125-day stochastic oscillator based on closing prices only, none of these intraday highs and lows. And then I take a 5-day moving average to smooth it. And so what this does is it gives you an idea of where the closing price is relative to the 6-month range. And when we get above 60 in this indicator, I turn bullish, and you can see we're green. And if I back this out, you can see the finance sector has been green since there we were bearish in July, and then we got bullish in August. So since August, it's been bullish. And so those are some pullbacks. And so the second indicator here is the momentum composite, and it's used to identify short-term oversold conditions when the longer-term trend is up with whatever indicator you're using. In this case, with ETFs, I like to use Stoke close. With stocks, I like to use the trend composite, which I'll get onto another time. But basically, the momentum composite is 5 momentum oscillators, and when they turn when they turn oversold, that indicator turns negative. And so you can see here we had 5 oversold that dip there. We had 3 oversold here, and we had 4 and 5 oversold here in June, and that gave way to a bounce. We had 3 oversold in mid-July, and that gave way to a bounce. So I use that to identify short-term oversold conditions that can lead to a mean reversion opportunity. And these indicators are available. If you go down to the right-hand corner, you click on that plugin icon, and there you can see all of the plugins available. There's the Trend Investor Pro Indicator Edge plugin, and click on that, and you can read more about it. But looking at finance, we got some classic technical analysis going on here. First, we're in an uptrend. Second, we get oversold twice. and we get bounces. And so if you didn't like those kind of signals, you got a pattern signal in that we had a falling wedge. So you had a falling wedge within an uptrend. You hit a new high. You corrected to work off your gains. And this is what I mean by short-term relative weakness is not really an issue, because finance was underperforming in mid-July, mid to late July. But still, this was a bullish continuation pattern. And there you can see we got a break above the wedge line. Then we got a break above that high there, and we hit a 52-week high. So this broken resistance zone here turns into support, and you can see we got a throwback, and we held, and we got the bounce. So this becomes the new support level to watch for the success or failure of this bounce here. But finance is looking good because we got the two oversold bounces, we got the wedge breakout, we got the throwback that was a successful test, and we've got a bounce. So over at trendinvestorpro.com, I specialize in trend and momentum strategies. I'm basically looking for short-term bullish continuation patterns within a bigger uptrend. That could be oversold conditions. That could be the falling wedge I showed you with XLF. That could also be a falling flag. So on the main analysis page, you can see all the reports that are available. Most are for subscribers. There's a few free articles there. But very reasonable subscriptions. And tomorrow I'll be coming out with the ETF trends, patterns, and setups report, which I do every Thursday. And that is a very long report with lots of charts and analysis. Here I was looking at AD% and breadth. And then I was looking at the number of stocks that were in uptrends versus downtrends. And there we can see large caps and RSP in uptrends, and IWM and microcaps in downtrends because of the Stoke close. And I also keep track of these Stoke close signals for trend following strategies. So come on over and check out trendinvestorpro.com for more information. So the XLF example is an example of a success, but there are failures out there. Nothing is foolproof on Wall Street. Here's SLX, one I was watching last week, and you can see we had this corrective pattern. We get this breakout, and so you have the breakout zone turning into a support zone. So we break out, we throw back, and we test that support, which is from broken resistance. We test that newfound support with a throwback, and we bounce. So things are looking good here in the 67 area, but then boom, it's a failure. We move back below the breakout, and this trade has failed. Now we're getting a bounce here, but as far as I'm concerned, we didn't hold the breakout zone, and so this one is not as strong as XLF. It showed more weakness, and it's back to the drawing board and just waiting for the next signal here or setup. So if you'd like to know more about trendinvestorpro.com, you can click on the link in the description below. If you like this video, please give us a thumbs up and consider subscribing. Thanks again for tuning in, and I'll talk to you again next week. Have a great day.